Retired Revenue Officer McGary here, and we are talking Tax Smart. Today I'm going to do something a little bit different. It's not tax related, but it is related to finances, and it's kind of a bonus video, I would say. In my last video, I talked a little bit about credit scores and the importance of understanding credit scores as related to student loans and defaulting and what have you. I thought I would just give you kind of a short bonus video and explain to you a little bit about credit scores and the importance of what those scores represent. So basically speaking, your credit score is a score which is given to you by the credit card companies, analyzing five different factors. And so what they're looking at is your credit history. So you have four companies, three of which are reporting agencies that businesses report your credit histories to regularly, and they use that information to develop a profile of who you are. That would be Equifax, Experian, and TransUnion. There's a fourth company called FICO, which is an analytics company, and they don't look at histories, but they look at the analysis of how you use credit. When you have a score assigned to you, that score is made up of several factors that you have some control over, and that's what we briefly want to talk about. So your score is made up of your payment history. 35% of your score is payment history. The amount that you owe, this is often called the debt to credit ratio, where they look at how much credit you actually have and how much you're using that credit. This is normally related to credit cards. So they're looking at the use of credit cards, and they're looking at what would be called the debt to credit ratio. They do not like to see a usage of credit cards more than 30%. And so they track that information, and that makes up partially your score. There's your length of history, how long you've been using credit, and the factors that are involved in your use of credit over time. That's 15%. There's the mix of credit. So, do you have car loans? Do you have a house loan? Do you have credit card loans? What type of loans do you have? So there's a mix of credit that they look at. That's 10%. And then finally, they look at, in particular, they look at, do you have any new credit and how that might affect your credit cards, and that's 10%. So what they do is they develop a score. They have a range of scores, all the way down into the 400 or 500s, all the way up into the 800s. 800s considered excellent. In the 700s is considered good. Below 720 is considered fair, etc. So, and the companies use this information in order to figure out how they're going to treat you as far as credit is concerned. Now, let me go back and just clarify a couple of things. First of all, your payment history. Payment history is really important here. What we're really talking about is how you make your payments to those credit cards that you have assigned to you. And what I'm going to tell you is very important here. It's something that you need to understand. If you have credit cards and you're utilizing those credit cards, do not miss the pay date. Do not miss the pay date. Do not, you can set your cards up to pay automatically. So then, and usually you should pay them a couple days before the actual due date. But what this does is this allows it shows them that you know how to manage money. Listen, your credit score is all about understanding how to manage money. And that's really what they're looking at. And so what is your payment history? Do you make your payments on time? Have you been late in making your payments? Have you received penalties because you're late in making your payments? I would tell you, from my experience, that it's common for people to do this, and it affects their credit score, and it's something that you can easily take charge of and not let it be a problem. A couple of years ago, well, more more than a couple of years ago, so we were refinancing our house to get a better interest rate. And after I retired, so it's been like 10 years ago. And when the gal who was doing the research on my account looked at my credit history, she saw that I had more than a 35-year credit history. And in that entire time, I had not one late payment. She was flabbergasted by that. She said, I've never seen this before. I don't see where people, don't have problems making their payments. But I'm going to tell you something. I make sure that if I have a payment that is due, I make that payment on time. And I get that taken care of so that my credit history is pristine, because that's something that you can take care of, and you shouldn't allow it to be a problem. The other thing that would factor into this is what I talked about the other day: when you default on a loan. If you default on a loan, if you default on a credit card, if you default on a loan, they will not only cancel you, but they'll notate it in your credit history, and it will drastically affect your credit score. You do not want that to happen. If you take out a loan, if you're borrowing money, as you are on credit cards, for example, you make that payment on time so that you don't have that become an issue for you. The second deal that is very important that you can control is to understand the factors behind debt to credit ratio. They don't like to see more than 30% for usage of debt to credit ratio. And so it's a factoring where you're taking the credit limit that you have, and you're dividing what you owe by the number of credit cards that you have. And you can go online and you can figure out the math formula of how to do this. It's not very difficult. But they do not like to see the use of credit cards of more than 30%. If they see the use of credit cards more than 30%, they're going to not like that, and it's going to lower your credit score. Now, there are some people out there, like James Ramsey and others, that would purport to you that, particularly if you're a believer, if you're a disciple of Jesus Christ, and you're a believer, that you should not use credit at all, or in a very limited fashion. I would tell you that my experience has been that you need to learn how to use credit, because our world operates on credit. And we won't go into the weeds of everything that is involved with that, except to say that you cannot get things done without having a credit score. So because of that, it's very important that you learn in your finances, in your personal finances, to set things up so that you can do this, so that you can track and you can establish a credit history which will benefit you in the case of emergency. I remember when I graduated from college many years ago, I had used the GI Bill in order to pay for my college. I worked all through college, and we didn't really owe anything. We were a young couple. We had several small children, and I just made it clear that I was not going to owe anything. But what we did need is we needed a dinette set, and ours was falling apart. And so I went to I went to a furniture store and looked at seeing if I could get a dinette set, which was not an expensive dinette set, and was denied because I had no credit history. I said, but I've paid everything cash, and I don't owe anybody anything, and I'm good for this. And they said, no, you need to establish a credit history. And so it was a eye opener for me to see at that point that I really need to take some time in order to learn how to establish a credit history. And so I began to do that. And that's the reason why when we set up our accounts, my wife and I, even though I am the primary breadwinner for this house, and that is my responsibility, my wife lovingly took care of our children as they grew up and took those responsibilities, and manages the food budget and the household budget, but all the bills and everything else, that's my responsibility. So I set up our checking account and our credit card account tied to that checking account so that it was under her name. So she's first on the account, which was annoying as accounts were changing and they were looking at various ways to make sure that they had correct verification of who could talk on the account, etc. Because they would not want to talk to me, even though I was the one controlling the account. And so we had to set it up so that I could talk to them as a secondary party on the account. That said, the reason I did that is because if something were to happen to me, and my wife was a widow, or there was something where she needed to be able to establish herself outside of being connected to me, that she would have a credit history and that she would be able to operate and function as she needed to. To that tune, it's kind of funny because when you look at a credit report and you look at the both of us, so you put in the information for me and you get my credit score, and then you put in information for her and you get her credit score. Her credit score is better than mine, and she doesn't she doesn't earn any money. But the reason it's better is because we set it up in such a way that she would be able to establish a history there and be able to have that available to her. So credit scores are about learning how to manage money. And this is something that you're going to have to deal with all through your life. It is currently the practice of many businesses from insurance companies, to whether you're going to be able to get housing, and even some employers will look up your credit scores in order to see whether you know how to manage your life and whether you understand management of funds, and whether you're a person who has a history of being trustworthy in the responsibilities that you take on. Those are all reflected in your credit score, and there are many companies that are now using a credit score in order to establish that. So if you're a young person and you're getting ready to learn how to be in society and be able to do things that you need to, then the credit score is something that you absolutely need to pay attention to. And this is something that many people simply don't understand. So again, very quickly, those 5 factors are your payment history. Guard this with your life. Make your payments. Do not be late. Set up an account or set yourself up a budget. And I have a simplified budget that I use that is very effective. But set yourself up a budget, operate within that budget, know what you can and you cannot afford. Your payment history is very, very important. Make sure that when you set up your budget in such a way, make sure that you're taking into consideration the debt to credit ratio. Now, there's lots of businesses that you'll go into. They'll say, open this credit card. If you go to Home Depot, you go to Lowe's, or you go to a department store, Target, Walmart, any of them. They all have cards that they want you to get. And it's tempting to take that offer and to open up that credit card. But if you have too many credit cards, that's not necessarily good either. And so you have to be sure that you understand that you keep your debt to credit ratio as close or lower than 30% as you can. Your history. Again, the older you are, the more established you are, You need to have a history of being able to show that you can manage payments and that you can manage money and your responsibilities in that way. An easy way to do that is to get a credit card through a bank or a credit union, and you fund it like it's a pre-funded credit card, but you're funding it, and then use that credit card and make payments to it, so that you start to establish a credit history. And after you've got a stable history of a couple of years, you'll begin to see that your credit scores will start to change and reflect that. And then again, a different mixture, um, you have the use of various types of loans, like a car loan is a good way to establish your credit history. And as I said, don't go out and be opening new accounts all the time, because it normally reflects poorly on your credit score. There are a number of places where you can get a free credit score. Even certain credit cards will offer you the option to be able to see your credit score, and it not cost you anything. So there's a number of options available for you to find out what your credit score is, and give you an opportunity to begin to get on top of this. As I said, this is a bonus video, and I hope it's been helpful for you. Just remember that this is a very important aspect of how we do things in today's world, and you need to have a good credit score in order to move forward. And I would encourage you to work on beginning to establish that.